Well, folks, the stock market crash has just gotten a whole lot dang worse. And yes, I am calling it the stock market crash. I know some folks will say, well, the S&P 500, it's only down blah, blah, blah percent or something like that, okay? Let me be very clear. The stock market is dictated in terms of the indexes and the way that looks by a few of the biggest stocks out there, okay? And I'm going to show you that in this video as well, okay? We got to get into the devastation that's happening out there. We got to get into how the market is being basically tricked into looking a lot better than it really is, and what's going on beneath the surface is actually like startling, okay? Then we're going to get into any moves I made out there today, if I made any moves out there, and what you should get ready for over the next couple weeks. Okay, so we got a lot to get into in this video. Hope you enjoy this as always. It's getting wild. We got drama, and more drama, okay, out there. And make sure you hit that subscribe button because it's absolutely free, and that button is drama free. All right, you guys. So right off the bat, I thought I would start out here with trying to find any stocks I own that are actually up today, or at least that are on my watch list. And I do own both these stocks, small position in Pfizer, big position in Walgreens. And those are the only two stocks pretty much you can find that are up on a day like today, Pfizer and Walgreens, okay? Oh, that's slightly sad nonetheless, okay? So I want to start out here. Smile Direct Club down 9.2%. This is the perfect stock in terms of what the stock market doesn't want right now, okay? If you have big cash flow losses right now, the stock market does not want any piece of you. And Smile Direct Club, huge losses on the bottom line, obviously. And although the revenue growth is trending in the right direction, it's supposed to have a very good next year and future years, this is not the type of stock the stock market wants right now. I mean, it's selling off anything that is considered any bit of risk, right? Now, Smile Direct Club is another perfect candidate for potential margin calls. It's another perfect candidate for tax loss harvesting. Think about it. Everybody that's ever bought this stock, it's at an all-time low. So if you've ever bought Smile Direct Club at any point in history, you're down in this stock. And so if you have any gains you have had any gains in general this year, right? Why not go ahead and sell a Smile Direct Club, write off those losses against your gains, make your tax liability much less, right? And then just buy the stock back in January or whenever the 30-day wash sale ends, right? And so that's the way a lot of people think. And this is how you get some of these stocks just get into these prices that's like, really, Smile Direct Club's at $2 a share. Interesting, okay? And this is happening for a ton of those stocks. And the interesting part is, the harder these stocks get hit, the more people consider stuff like this, right? The more margin calls that come, the more tax loss harvesting that comes, and you get this snowball effect, right? And so this is why you get into this sort of market where you're just being knocked around. You're like, oh my gosh, when does it ever end, right? And yeah, it's not ending right now. Look at Alibaba here today, down to 112. I mean, when did we ever think we'd see Alibaba at $112? This is a stock I still have not bought yet, although it looks like the steal deal of the century. It's just with Alibaba, it comes, as I've said all the time with the stock, great fundamentals of the company, a ridiculously cheap valuation that's gotten insanely cheaper, right? The downside with Alibaba is it's a Chinese stock, and it has to deal with all of that comes with it. There's talk of delisting of Chinese companies and so much drama there that this is just one of those stocks. I mean, yeah, the fundamentals look great, the valuation looks great, but it's a Chinese stock, so it's so hard to own. That's why I still can't buy it. It doesn't really matter what Alibaba goes down to. I can't buy the stock, and that's just unfortunate because, I mean, it looks like the steal deal of the century, right? But that's the way it is in this sort of market. Maybe I'll consider 2024 calls, but I don't even know about that, okay? Lemonade stock. Well, this stock is very, very sour right now. The lemons are strong in this one. Yeah, $43 this one's down to. I mean, this one peaked out earlier this year at $188 a share, and now it's at $43. Another one similar to a Smile Direct Club in terms of big losses, probably record losses expected next year for this company in terms of the bottom line, right? Yeah, a phenomenal long-term growth story, phenomenal revenue growth of this company, and a very, very compelling story for the stock, okay? This was, the perfect type of stock in terms of what people were looking for in a stock at the very end of last year in December of 2020, right? In January 2021, this was the perfect type of stock that people were looking for during that time. Massive growth over the coming years, a story stock. And now, fast forward 1 year later, that's how fast things change in the stock market. I always try to tell people, stuff changes quickly in the stock market. Here we are 1 year later, And no one wants a piece of Lemonade stock. No funds, no individual investors. No one wants a piece of this one, although it has probably a more compelling story than it had at this time last year. No one wants a piece of this one, okay? Because at the end of the day, they're a massive money loser. They're not going to make money anytime soon in the bottom line. It could be 3 to 5 years before this company can even think about profitability, right? And so this is not the type of stock that is going to go up in this sort of market, at least in the short term, right? Long term, it's a very compelling story. Short term, no one wants a piece of this. And keep in mind, everybody's down on Lemonade. Everybody's down on this stock, and so it's one of those that just continues to get more tax loss harvesting coming in. Eventually, people are going to run out of shares to sell on this one, but it's not today, okay? TDOC. This is Teladoc, essentially, is Lemonade's cousin. Okay, they're cousins because they both have incredible long-term growth stories. They're also massive money losers that could potentially take record losses next year, right? In terms of the bottom line. But the long-term stories in these stocks are phenomenal. By the way, I think our market cap's lagging a day or two on Teladoc. I think Teladoc's really at like $14 or $15 billion market cap now. We need to get that fixed on the Hungry Bull app, which if you haven't downloaded the Hungry Bull yet app on your iOS and Android store, what the heck are you doing? That's a way to track your stocks, cryptos, listen to SEC reports, earnings calls, all that stuff, okay? Someday I'll make money from that app, but it surely ain't today, okay? But then again, is there anything making money out there? It doesn't really seem like it, right? But Teladoc, $89 a share here today. This is Kathy Wood's, usually our second or third biggest position in the ARK fund. When it comes to Teladoc, I mean, this is one of those stocks that could we see a 75 in front of it? Absolutely. The interesting thing about Teladoc is, imagine if this stock somehow, and I'm not predicting this, but imagine if it falls to the 50s, okay? The reason I mentioned the 50s is because that is where Teladoc was prior to Rona, okay? If you go back to late 2019, this was a 50-something dollar stock. So imagine, and it's not out of that's the crazy part, it's not out of the realm of possibility to imagine this, like, shoot, another, few trading days of this, and maybe it's down to 50-something, right, or a low 60. Isn't that crazy? Because this company's had such huge expansion, had such a pull forward in long-term demand. They obviously have the Livongo acquisition they did, and such an exciting story. And it's a possibility that the stock's going down to those sorts of levels. Like, that's just, like hard to even comprehend that this is going on with a stock like Teladoc, right? So anyways, I mean, the long-term story is compelling. I might have to step in Teladoc. I've looked in the company. I like it for the long term. I also like Lemonade. It's just, I'm trying to figure out, like, is that the best place for my money right now? Or does it deserve to go in some other stocks? And so I'll mention, obviously, some of that in this video as well, okay? Look at Voyager Digital here today. Down to $13 a share, down 6.5%. This one here today. Voyager Digital, unbelievable long-term growth story, but yeah, no one cares about that. And this is actually a money maker. They should be extremely profitable in 2022. So that's a difference in a Voyager Digital versus some of these stocks. Voyager Digital probably will out revenue growth outside of a massive multi-year bear market. Will probably way out revenue growth companies like Teladoc and even Lemonade. But the difference is Voyager should actually make money on the bottom line each year. So yeah, really, really compelling stock there. And like I said, outside of a multi-year bear market for crypto, it's a pretty darn attractive stock, okay? Tesla is even down big today. This one's down about 6%. Big downward move for Tesla. This one had been holding really strong until today, and it just seemed like it couldn't hold any longer. And so what you're seeing happen now is some of these, higher, let's call them the riskier of the big tech, right? The ones that are seen as riskier of the big tech. Those ones started falling today, okay? That's the second to last tier that falls. The only tier left after that is, we're going to get into a couple of those stocks in this video as well, okay? Palantir. Look at this one, down 5.5% here today. When it comes to Palantir, 1861, I mean, shoot, another couple trading days like this, and we're at a 52-week low for Palantir. This one's a little different than, I call its cousins, Teladoc and Lemonade, but the difference is Palantir doesn't just have a long-term compelling growth story to it. Palantir also is expected to be profitable next year, okay? And so that differentiates Palantir between some of these other companies that have unbelievable long-term trends and huge, massive TAMs that are growing, right? But yeah, so Palantir, I'm looking at this one, and if it wasn't for so many dang other stocks dropping, this would be a stock I probably would have bought here today. It's just, when you're in this sort of market, there's so many stocks dropping all over the place, and there's so many deals all over the place. I call this type of market a shooting fish in a barrel. Okay, that's what it is here in December. A shooting fish in a barrel when it comes to anything that is small cap, especially. I don't call it anything. Okay, there's a lot of junk out there, but a lot of small caps are a deal. Some of these stocks are trading at ridiculously low valuations now, and there's a lot of mid caps that I would kind of almost put like Palantir, Teladoc into that category as kind of those mids, those 10-something billion dollar market caps. They're just really compelling that I'm like, oh my gosh, man. I really can't buy Palantir at 18 because I have so many other stocks that are out there that are just really, really darn attractive, okay? So, yeah, Palantir, I really like this one. I just wish their management team tried less hard in selling the stock. Oh, man. Yeah, it's a complicated subject. Beyond Meat, 65 here today. This one didn't make a big percentage move down, only a little less than 3%. But I just think it's interesting. $65 a share now for Beyond Meat. That's one of those stocks another one that's a money loser. There's no forward P on this stock because they're not expecting to make money in 2022. And the problem with Beyond Meat, it has a double bad, right? The revenue growth has been very, very low for this company recently, and they're expected to not be profitable. That's like a double sin in this sort of stock market right now. You just can't have that. And this is another one, tax loss harvesting for everybody. It's everybody. Everybody's down in Beyond Meat. So it doesn't matter when you bought it, you're down on it. And so if you've taken any profits, it's a perfect stock that people look at and, hey, who's to say the stock's really going to be higher in January? I can just buy it back in January, take my loss on this, rate this off against my gains. Now my tax liability is a lot lower, right? Than something like a Beyond Meat. So obviously that's going on. Oatly under 8 today. Oatly's getting really, really darn intriguing now. So Oatly is a big plant-based player that's trying to disrupt the dairy industry, okay? I've tried actually several of their products, and I'm a hardcore, I'd call myself milk drinker. I actually like their products, and I actually think this one has a very good long-term story behind it, a huge growth story. This is what I'm looking at and definitely considering, especially if this one keeps falling, which this is one of those stocks that easily could keep falling. No forward P on it, expect to be a money loser. Yeah, it's got great growth, but it's a money loser. No one wants this sort of stock in this sort of market right now, right, where it's risk off. No one wants any part of risk, right? Obviously, you could have more potential, folks that this is basically this company went public in the past year. So you have more folks that are insiders that could be selling out, not because I don't believe in the company, just at the end of the day, like sometimes you want to diversify some money, right? Or go buy a new house with that money or whatever, right? And so that's kind of going on with Oatly right now, along with being just dragged down by this sort of market. I'm looking at this one as pretty darn intriguing. Don't be surprised if I end up making a position in Oatly somewhat soon. I don't know if it'll be right now, but somewhat soon. Don't be surprised if I end up making a position in that one, okay? Then we have, let's call it the stocks I talk about a lot, stocks like Tattooed Chef, Corsair, both down 3% each today. The good news about those stocks, and they're not getting hit as hard as some of these other stocks, is they're already down so dang much that it's hard to get to push them much further, right? And, Tattoo Chef, the good thing with Tattoo Chef is it has a very, it's a cult stock, okay? It's a cult stock. There's no doubt about it, okay? And you have folks like myself that aren't selling that stock, aren't considering selling that stock. If anything, we're buying that stock, and that was a stock I bought today, by the way. That was one of many stocks I bought today. So that's just like, you'll always have, no matter what stock it is, you'll always have a certain amount of people that are trading it, trying to get in and out, right? But for the most part, the high majority of folks that are in Tattooed Chef are long-term shareholders, right? There's not a ton of fun money in that stock right now. There's a lot of folks like myself that have 7-figure positions in the stock and want to hold this for the next 5+ years because it has a crazy long-term growth story behind it. Plus, over the next year, their margins are about to go insane, which is something I can cover in a video, maybe a whole separately, because I really want to dive deep into that whole subject. So that's a little bit different. Corsair, they're down 3% every day as it is, okay? I love Corsair as much as I think anybody in the stock market, and that was another stock I bought here today. But yeah, when it comes to Corsair, oh man, it's just it's just one of those stocks that there's nothing Corsair can do right now in 2021 that can make the stock go up. It doesn't matter the revenue growth. It doesn't matter how cheap the valuation gets. There's just been a stock this year that it can't get it out of its own way, and it just continues to get devastated, okay? Nordstrom, look at Nordstrom, under $20 a share. Very, very compelling for folks that like a long-term dividend stock. Nordstrom should bring back, in my opinion, the dividend in a meaningful way in 22 and moving forward. The only way they don't, in my opinion, is if they really have something so huge growth-wise that they end up looking and they're like, hey, we have such a big growth opportunity here that we don't want to pay out the dividend. And that would be another compelling case, right? Look at the Planet here today, down to 335. I think I might have picked up some shares at, I don't know if it was 333, 334, something like that today. The Planet, I mean, that's just the sort of market right now. One of the most compelling companies in a massive growth industry for the next decade plus, and a company that's as well positioned as anybody. It doesn't matter. This market doesn't matter. It doesn't matter the fundamentals. It doesn't matter the revenue growth Planet has. It doesn't matter that the fact that Planet's going to likely be profitable in 22 with 50% plus revenue growth. Like how many companies have revenue growth of 50% plus, have a decade plus of massive growth ahead of themselves, and are expected to be profitable? You can't find that many stocks that have all those characteristics, and the Planet is one of those few. But it doesn't matter right now. All that matters is sell, sell, sell. Okay, that's all that matters in this sort of market in the short term. Look at the Hood today. The Hood down about 9%. I mean, Robinhood's trading at valuations it hasn't traded at in many, many years. Okay, let's just put it that way. Obviously, it's a company that's went public in the past year. By the way, our market cap's slacking. It's under 20 billion now from Robinhood. But this is a company that, you have to go back to when it was a private company to find valuations that are, as low as it's getting for Robinhood. And it could even get worse. That's a part for the Hood. So it could get even worse over the next couple quarters, even outside of this December stock market crash we have right now. Could get even worse because I think there's a high probability they could see users with very low user growth, flat user growth, or which it wouldn't be growth if it was flat, right? Or maybe even slight user declines. I won't go as far to say user declines. I think just flattish or very, very slight growth, and that's bad news for Robinhood there. Never mind assets under management. Good luck with that category with all these stocks going down massively, and considering a lot of the stocks that a lot of Robinhood folks hold have been going down massively. The AUM, which is a very important metric people look at, they look at users and look at assets under management. Assets under management is probably going to drop for this company over the next couple of quarters. What do you think that's going to mean for stock? Okay, Coinbase. I mean, this is Robinhood's brother, and down 7% plus today. The good thing about Coin is at least, they make money. But yeah, when it comes to Coin, that's just another one that continues to be devastating. Now, look at Apple. Only down 1% today, okay? Only down 1%. Imagine for a moment, the biggest market cap in the world, Apple. Imagine if that stock had been just down in line with the market, how bad the S&P 500 would have been today and the NASDAQ would have been today, right? Look at Google McDougal, only down 1.3% today. Imagine if that one had been down as much as the market today. Apple and Google and Microsoft and a couple of other big techs, right? Money is hiding out there. So essentially you have so many funds in individual investors selling stocks like massively right now, right? And you basically started this kind of in November. I mean, it had been going on even before November. I just think in a massive way in the back half of November and into this early part of December. So you have all this money, right? And if you have massive amounts of people selling, the money goes to sideline, right? Some of that money gets deployed in stocks like Apple and Google, and that's why their declines are so few and far between. That's why these stocks have been holding up so dang well. It's because some of that money gets there. Some of that money just stays on the sideline, right? Some of that money is going to enter back in January, but a lot of it's just over there on the sideline. I know on Millennial Money we were talking, I think Kevin said something like he has $9 million plus now on the sideline, right? That money's going to get back in the stock market. It's just not in the stock market right now. Think about how many funds have been selling out of shares left and right. If you're a fund, you got to invest that money. You can stay on the sideline for a little bit, a few weeks or maybe a month or two. But at the end of the day, people are investing that fund. So you invest the dang money and make some money off it, right? Not so you go to the sideline and put it in cash where cash is consistently going down in value, right? So all this money has to come piling back in the market, right? Some of it comes in and it goes into stocks like Apple and Google to just chill out for a time until people feel like, okay, I can invest again. But yeah, that money has come in. So I posted a video last night, okay, in the private Discord chat, in my private stock group. And I posted this video. And in that video, I went into essentially how we're kind of in a trick market right now where it makes it look like the indexes aren't down that much, the NASDAQ, the S&P 500 and whatnot. Like, oh, it's not doing too bad, but really it's awful. Because the thing is, the top 10 NASDAQ 100 stocks make up over 55% of the total weight. So as long as those 10 stocks are holding up good, Apple, Microsoft, Amazon, Tesla, Nvidia, Tesla fell, today, that one started to fall, right? Nvidia, Google McDougal, you look at, obviously, FB, Adobe, and Netflix. As long as those stocks hold up somewhat decent, the market's not going to look horrible, right? It's going to be like, oh, it's in decline, but it's not going horrible. If those stocks represented what has been transpiring in small caps and a lot of the mids, everybody in the world would be talking about how bad the stock market is right now, because the stock market would be down 20% plus, right? But because the big dogs, Microsoft, Apple, and some of these Google, McDougal, and some of these others have been holding up decent, it makes the stock market look like it's in a way healthier place than it actually is. Because the truth is, the market is not in a healthy place right now at all, especially when it comes to the small caps. So in terms of me, what I'm doing out there, so obviously today I was buying the suspected stocks, okay? Obviously I was buying Tattooed Chef today and Corsair. I was obviously buying stocks like The Planet and even bought some SDC Smile Direct Club, a little bit of a more risky play. I actually bought some Avant Brands today, which is another risky play, which that stock's now down to, levels it hasn't been at since that company was a joke compared to where it's at today. So I was doing definitely some buying out there today, right? But I'm not going too crazy because you got to understand this market could drop more. We're still at the beginning part of December. I'm recording this video and it's December 3rd today. I mean, we're still at the end of the day, we're still at the beginning of December. There can still be more tax loss harvesting coming. There can still be more margin calls coming. There can still be more big cap sell off, right? I don't know what that means for small caps. Usually it means small caps get hit even more, but a lot of these are so devastated that you start to run out of sellers, essentially, in a lot of these stocks, right? And so it's an ugly market. I'm all okay with that. I'm like, let's just make it as ugly as possible in the short term. At the end of the day, all this money that's going over to the sideline, it has to come back in. If all these people selling, all these funds selling, putting that money to the sideline, it's going to come back in the market in a massive way, in my opinion. Probably starting as early as late December or early January. And obviously, I'm a long-term investor, so I don't trip off it. Like, if it doesn't come in until February or March, it doesn't matter to me. I'm in these stocks for many, many years out. It's just like if I'm going to put my hat on here and try to figure out what's going on. Yeah, high probability this money comes flushing back in. And what that will do to a lot of these, especially small caps, because that's where the big opportunity is, it can be, the gains in such a quick amount of time can be absolutely ridiculous. So there's going to be a ton of money to be made coming out of this mess we're in right now. It's just a question of how long does it take to get to this money. So hope you guys enjoy this video. As always, that's my opinion on what's going on. Get ready for more potential selling. Obviously, I'm buying stocks. Much love as always, and have a great day.